My next guest says a bubble may be forming, but we're definitely not there yet. With us now, CNBC contributor Ron Insana, co-CEO of Contrast Capital Partners. Ron, welcome. Tim, welcome. You're at the desk as well. Kelly, welcome. They'll get you a chair, Kelly.
I'm happy to stand.
Anyhow, Ron, let me say, you make a very persuasive case in an article you wrote that while there are some similarities to the bubble that formed during the internet period back 20-some years ago, that we're really not there yet at all. Tell me why.
Well, Tyler, in many ways, we're not even close. When you go back and look at what transpired from 1995 through 2000, you saw not just companies go up on the prospects of the internet being a transformational technology, but also you saw stocks go up en masse, and then you saw huge IPO issuance. You saw huge public participation. The Fed was in an easy money mode. And ultimately, you saw price-earnings ratios. When you take out the 5 biggest stocks from the NASDAQ 100 in 1999-2000, the PE was 3,666. And of the nearly 500 companies that went public in 1999, 77% had no profits. It was a wildly different environment. The stocks that are benefiting from AI right now are big household names, albeit they've gone up a lot, huge market caps, but we're just simply not there yet.
And these, as you point out, these stocks that have gone up, whether it is NVIDIA or Google or Microsoft or you name it, these are stocks that, oh, by the way, do have lots of profits.
Yeah, and there's only 7 of them right now that are really benefiting from all this, or 8. You know, it's not the same environment yet. And, you know, listen, you remember when we'd go to cocktail parties in 1999 and 2000, and everybody and his brother, mother, sister, you know, uncle, cousin would be asking you how to get in on this. You know, where do I put my money?
At that cocktail party.
Yeah, it was a different era. Yeah,
you know,
it was 30 pounds ago for me. So,
many pounds ago for me as well. I will never forget going to a Chinese restaurant in Asheboro, North Carolina, and the waiter asking me about CMGI. Remember that one?
Which one? What was CMGI?
CMGI
that was David Wetherell, who had a holding company for a number of different internet entities, none of which had revenues or profits, except for Lycos, which was an internet service provider at the time. I also mentioned KTEL. David Faber talked about this earlier in the week. You remember KTEL, a company that sold horrible 70s music on the TV in infomercials after midnight. They said they were going to use an internet strategy. The stock went from 5 to 30 and then 0. Or Zapata Corporation, which was a fish meal and bone meal company that put .com after the name, and they rocketed as well. I remember Joe Kernan talking about that one. This is a very, very different environment. It's still early days.
A little CMGI with your Kung Pao chicken, I guess, is what we had. Tim, what do you think?
I think I still have some KTEL 8-track tapes on the best of the 70s.
Yeah, exactly.
I think the market has had a disproportionate kind of response to who they're going to reward. And I think about, you know, Ron's talking about the profitability of the mega caps here. There's no question about it. And the question is, are we going to see a massive CapEx spend around AI, especially when you look at across the semi space? I realize NVIDIA kind of told you when they blew those numbers and they gave the guide for the 2Q. But I think that's the real question. And I think if you think about on some level, we start talking about those retail companies that have sprinkled some AI pixie dust into their story. It's still kind of a zero-sum game in terms of the retail dollar. I think about somebody like Meta, and I actually think that this may be a TAM expander for them. So there are those companies that I think are winners. I think there's still a net, zero sum of the entire marketplace that they can go after, but we've priced a lot in.